guys, this is Neo again. Welcome back and thanks for tuning in. Hey, let's have a little bit of celebration for ourselves, shall we? We all know what is going on in the market. Great coffee. Hey guys, look at, again, we are on Yahoo Finance and S&P 500 up 2.36%, Dow Jones up 2.61%, over 1,200 points up, and Nasdaq, oh wow, 2.77%, stealing the show out of the three indexes or indices. Some people say it that way. Either way is fine. Don't worry, no worries. And if we look across the board, everyone is pretty much green. Form factors, our newbies, Matter, our SoFi Technologies, Navita Semiconductor, Robinhood, Neo, NIO, Firefly Aerospace, ELF Beauty, Elf Beauty. On semiconductor, everybody is up. Oh my God! Some of the top gainers are, 15%. Of course, some are beaten down already. So much beaten down. Let's take a look at SoFi. What we mean by buy low, sell high. Over the years, I have been with the market for 25 to 27 years, right? So my first time of looking at the market was actually 1999 when I was still studying at Cal. Hi, everybody from Cal. How are you? So I was studying at Cal, and our topics at High School of Business was my thesis for my essay was observing the market. It's a simple topic. How to observe the market? There are up and down cycles, and what are the contributing factors for the up and down cycles, right? So you have most of the time or a lot of the time, the market sentiment is actually detached from the reality. A lot of the time, what I mean by that is a lot of the time the market does not look at or does not seem to even care about the fundamentals of the companies, of the indexes. So, for example, you have Amazon between 2000 and 2005. Amazon was growing the revenue growth over 30% year over year growth. And still, by 2024, a lot of analysts were still saying Amazon was just an online bookstore, which was not correct. And Amazon is not just an online bookstore, as we all know now, right? It just happened to start with a bookstore. And it was growing top line growth, which is the revenue, even though it was spending a lot of capex on R&D and expanding its reach to all over different cities and states of the United States. For example, they have to acquire land, they have to build out their warehouse infrastructure, and they have to expand their logistics front end and back end system. And then they have to also expand how, the service for after sales service, such as how to refund, how to get the shipment of the product back and do the proper refund, all that. It's a crazy business to scale up, if you ask me. However, Amazon did it, and they were the first company which did it, and they had the first mover advantage. Remember, first mover advantage. SoFi Technologies nowadays, today, is similar to back then Amazon. First mover advantage in digitizing everything finance. Amazon back in the day was trying to digitize everything commerce. And nobody saw it coming. Nobody saw the AWS, Amazon Web Services coming. The same thing, nobody sees SoFi big banking business coming. Now, let's take a kind of a detour from this, and let's take a look at SoFi. In my next video, I will talk about, let's go to resources. Where is the investor relations? Oh, right here, investors. And look at SoFi. SoFi launches big business banking to power fiat and crypto business on a single regulated platform. Let me show you some of the preview of my next video. It's gonna be amazing. You guys have to understand what SoFi is up to. The addressable market for what SoFi is planning to do now with that announcement on April 2nd, the addressable market for this segment only, not the rest of the business channels of SoFi Technologies, only this segment, big business banking, big banking business. The addressable market for one-stop shop, regulated big banking infrastructure combining fiat and crypto assets is rapidly expanding, driven by institutional adoption, stablecoin adoption, and the need for 24/7 global liquidity. 24/7. You go to a Citibank, you go to a Bank of America, you go to a Wells Fargo Bank, you want to transfer funds to overseas. Oops, today is Saturday. And it's 3 p.m. afternoon is on Saturday. They are closed. Sorry about that. Come back on Monday morning. Sorry, sir. I'm so sorry. Right? Even if the branch is open today on the 4 p.m. Friday, you transfer the fund. Can your relatives or your friend get the fund in India, China, Japan within the next 10 minutes? No. They have to wait until next Monday, Tuesday, Wednesday. They have to wait until the clearance house clear that, the transfer house transfer that, the exchange house exchange that, and then they get delivered maybe 2-3 days later. So today is maybe 4 p.m. Friday, when your fund will be finally delivered to your final destinations of your choice. It could be the upcoming Tuesday, Wednesday, or even Friday in some cases, depending on which countries you are sending this fund to, right? So now, 24/7 global liquidity, okay? As of April 2026, the market is shifting from experimental to essential plumbing. Just plumb them through all the pipes, go down all the different units, right? To different nearby buildings, faraway buildings, go through the plumb. It's a super hyperloop, if you will, for financing. It's crazy. In seconds, not minutes. We are not talking about minutes. In seconds, or maybe in minutes if it is far away. Because some of the fund, they need to go down to under the seabed, where they have fiber optics wires going all the way to other parts of the world, and it gets transferred that way. So depending on how long and how fast those transmission can be, right? So we are talking about seconds or minutes away. And as of April 2026, the market is shifting from experimental to essential plumbing. With the total addressable markets, TAM for cross-border stablecoin payments estimated upwards of 17.9 trillions. And SoFi just made that announcement, and that because of how much it encompasses all the different categories of finance. So we will reserve it for our next video. And let's go back to, wow, what is the market doing? Look at that. Look at our companies. They are all green, right? All green. Firefly Aerospace, Meta. Oh, we went through that. I forgot. Sorry. Okay, let's look at SoFi. Ooh, wow. Buy low, sell high, buy low, sell high. What is buy low, sell high? You want to buy here when nobody believes in the company. When I bought SoFi at $655 per share, you know, the short sellers were saying SoFi would not make a dime in profit. That was year 2023 and year 2024. And then you have retail investors already lost their faith of the company because look, they mostly bought when the company went IPO, when it was all the hype. And then interest rate remained high. If you remember, Federal Reserve Bank 2022 was raising multiple times of the interest rates. And then it kills a lot of the growth opportunities for the company. And also, remember what? Crypto was not legal to be owned, right? They have not legalized using crypto as payments. They did not have the legal framework also to grow cryptocurrency as the backbone of financial transactions, right? Until what? Until last year, it was signed into law that, even this year, the Clarity Act, right, is still yet to be signed, but we are seeing more and more developments toward this side of the business of finance, where crypto is increasingly becoming the backbone for fast, secure, low-cost global transactions. Am I not right? Okay, so you want to buy low and sell high. So when we look at the market, let's look at NASDAQ, right? Let's look at NASDAQ. Can we go there? Yes, we can. All right. Yeah, today is very cheerful. The market is really cheerful. Let's look at market. We have survived .com era. Wow. NASDAQ was 4,500 and went all the way down to 900 or 1,200. Yeah, 1,200. And that, if you remember, that was the time of 911 attack. So the market survived .com, survived 911 attack. So remember the .com era, a lot of short sellers were saying, oh, Amazon belongs to .com. They have a .com in the end, within their name, so they are doomed. No. If you see the future of digitization of commerce, and now the future of digitization of finance, you win. Why do we have to listen to analysts? Because a lot of the time they're old people. They're 50s, they're 70s. I'm not judging of people because of their age, but because they are so belong to the older generation, they do not understand where the new technology can take the markets to. How the new technology can revolutionize by cutting costs and improving efficiency across the board for the whole entire segment of the market. They don't understand that. Actually, you and I, because we are the newer generations, we are more versed in using cell phone and mobile devices. We know we can purchase products via our digital devices, our digital mobile devices. We can buy it or sell it on the go. We don't even have to walk inside a store. Same thing, we don't even have to walk inside a bank location or branch of a bank. We don't. We can do online. We can use our mobile devices. We can use our digital devices to do our daily banking. We don't have to shake hands and walk into a bank location. No. Same thing how we make purchases online via Amazon.com. No, we don't have to physically walk into a store or a location of the branch or bank. So why didn't analysts see that, right? You would think, right? Because now it's obvious, because now it's after the fact. Now we have 2 decades of witnessing how Amazon has done it, right? But remember, how about right now we do not have Amazon, but SoFi is the first one to digitize the entire industry. then we have no clue how SoFi may do it, right? Because everything that is we are talking about that is future events is full of uncertainty, right? And those analysts, they do not want to take risk. They have a lot of their investments, those big banks, those big investment banks, they have a lot of investments in successful businesses at that time already. 2000, 2005, and Amazon joined S&P 500 in 2005, right? I still remember, and SoFi will be joining this year. And then, so that is crazy to think about how digitizing can change the entire industry, because banking was always a handshaking process and face-to-face process. And nobody knew that, some people don't even have to look at the product. They don't even have to touch it. They can buy it first. If they don't like it, they can have a refund and ship it back. And that was a seamless process too, by the way. So without a face-to-face interaction with a banker, a lot of old-timer analysts are thinking, this is not the way to go. People need to shake hands. People need to see face-to-face in order to gain the trust. But hey, what is trust? Is Amazon not gaining the trust of its shoppers? No, right? So we have seen an example such as Amazon, which has successfully digitized entire commerce model. Why can we trust SoFi to digitize an entire banking and personal finance model, right? Now, this is where the market separate winner and losers. Buy low, sell high. What does buy low mean? You have to have faith. You have to have insight of what the future holds. You have to understand why existing businesses have a lot of inefficiency and high cost, and too many layers, too many aspects that each business cannot control under their power, because a lot of the existing businesses, they outsource a lot of their different layers to other business to take care of. So that's why when you send some money from United States to Japan, let's say, it has to go through the clearance house, which is a third party not under the control of the same bank, and then have to go through the exchange rate platform, which is another layer of not under the control of the same bank, and then go through the foreign receiver, which is another layer of blah, 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 not controlled by this same brand, meaning Bank of America, Citibank, Wells Fargo Bank that you are using, which have been too big to fail since 2008. By the way, these are all zombie banks. If you still want to support them, it's your business, it's not mine. I would not care. But I am more future looking and forward looking, so I support SoFi 100%. And I ditch all the old legacy banks already. Okay, so let's go back to SoFi, right? So how do we buy low, sell high? Is when the market sentiment is the worst, regardless if the businesses are doing well or not. And then short seller attack your company. How many times Amazon has been attacked by short sellers? And each time, if we look back at Amazon, wasn't it the best time to buy? I remember a case where the short seller attacked Amazon and said they over exaggerate their sale. Yes, it's kind of like SoFi, how the muddy water, alleged SoFi overestimate or overstate their loan platform revenue. I cannot believe it. So the SEC is not doing their job. the Security Exchange Commission is not doing their job and monitoring the reporting of this company. Then the OCC, the financing arm, right, of the banking industry, they are not monitoring how this company reports their earnings. And then FDIC is not monitoring. And then the independent financial auditor, accountants, public accountants, they are not auditing SoFi financial statements correctly. And suddenly, a third party out of nowhere, some unknown person say he is muddy water and say, oh, I have found this error, that error, that error, that error. Now, your job is to find out what is the fake. Not news. These are not news. Fake. What is allegation? What allegation is true? What is not true? Yeah, that is your job to find out. Then there is the market sentiment that is not specifically company related, but the general overall sentiment for the entire market. So what did the last month do? The overall sentiment for the entire market was super low. I have talked to you guys many times, VIX, right? When you look at VIX, every time it surges to 30 is what is a buying opportunity. If it surges to 40, it's even better. If it surges to 50, it's beautiful. It surged to 30 last couple of weeks. Did you not buy? OMG. Let me let you know what I did the last couple of weeks. I closed that. I did buy SoFi. I want to show you guys. You know what? I show you guys in the next video. Yeah, it crashed. It crashed just right before I start the video, so I have to find where I had it again. Okay, I bought 1,800 more share of SoFi, all under $16 per share, as low as 1505 or 1515. Yeah, I start buying. Hey, guys, SoFi is guiding 60 cents for bottom line net income per share, right? But if you remember, Anthony Noto says SoFi should see between 60 and 80 cents per share net earning per share for 2026. If the company put more in expanding partnership and in more R&D and CapEx, then SoFi will see closer to 60 cents per share net profit or net income. But if the market is actually doing worse than expected, SoFi will not put too much money into R&D, meaning will lower the cost of operation, and then we'll see even higher net income closer towards 80 cents per share. So it's not as if SoFi will be struggling to show 60 cents per share net earning. No, SoFi will not be struggling to do that at all. They actually can beat it handsomely and easily. So SoFi should be at least, I would think, 68 to 75 cents per share net profit per share by the end of this year is very, very feasible. It's more than feasible. So I will be actually using 70 cents per share as net profit and then give it a 50 PE. Why 50 PE? Because at higher than 30% growth for a business, most of the time I see software and even some hardware companies, their PEs are actually higher than 50. I'm already not using higher than 50. Okay? And then, if we look at next year, SoFi will be very likely to see $1 per share net income. If we give it a 50x PE, that is $50 per share for next year, 2027, by mid-2027. Why mid-2027? Because stock prices is always forward-looking. They don't care much about what is currently, how much profit is currently making, as much as they care more about what the company is making 6 months to 9 months to 12 months down the road. So the stock price will be reflecting near future down the road what the company can be making in terms of profitability. So now, if we give $1 per share net income for 2027 and 50x as the PE ratio, that gives SoFi $50 per share, regardless if they will be included in S&P 500. We will talk about it separately. And then you give it a 10% discount. Why 10% discount? Because we need to discount 2027 stock price back to 2026. And bond market, the rate is only about 4% to 4.5%. And plus inflation, 2% to 3%. So the discount rate should be roughly about 7 to 8%. But I give it 10% to be on a more cautious side. Okay? So $50 per share by mid-2027 target price for SoFi. You give it a 10% discount to go back to 2026, mid-2026. So that is $50 times 0.9, because we are discounting it by 10%, right? So 0.9, which is 90% of $50 per share, yields $45 per share. So SoFi has a very good likelihood that the share price can reach up to $45 per share by the end of this year, actually. I'm not even talking about mid-26, okay? To be more cautious. Then, by end of this year, it could be $45 per share on the bullish side. On the bearish side, the base case, we use this year 70 cents per share net income, as we just discussed, and then give it a 50 PE multiple, still $35 per share. So base case, $35 per share, and bullish case, $45 per share. Now we talk about S&P 500 inclusion. With S&P 500 inclusion in Q2 or Q3 or Q4 of this year, if we look at Palantir, we look at Bertif, and if we look at AppLovin, if we look at all the previous company which have been included to S&P 500, the next half a year, their stock price surge between 20 to 50%. I take that as 20% for SoFi. $45 times 20 more percent, SoFi will see over $50 per share by the end of this year if it will be included into S&P 500. But if it will be in the case of Palantir after, actually it was 9 months or 6 months. I forgot. Well, I will go back and check. But anyway, Palantir went up almost 90%. It's crazy after the inclusion to S&P 500. So it was over $200 per share at one point. It's crazy. So if that is 90%, right, then SoFi $45 per share and 90% add-on is easily $80, $90 per share for SoFi, if that is the case, right? But let's not be too optimistic or too aggressive in our expectation. So I would suggest SoFi base case $35 per share at the end of this year. Bullish case $45 per share at the end of this year, and it will be included into S&P 500. then SoFi should see between $50 per share and $60 per share by the end of this year. Okay, so that is my take. And so what is buy low, sell high, right? Let's go back to this point. Is whenever we see the fear index by VIX, surge up to 30 or higher. See, this is when 2022, the commercial bank collapsed. And then this is last year, Liberation Day, and it went all the way up to even over 50 at some point. It doesn't even show here. It's so high at one point. And then nowadays, this year, we see it go over 30. I bought it right around here, 30. And I will show you in my next video. And guys, everything is green as of now. Whenever it's the most fearful time, that is the biggest opportunity for you and me as investor to jump in and buy low. That is what buy low means. If there's no fear for the market, how can we get undervalued shares of companies? Think about that. If everything looks good, do you think the market will suddenly just collapse and the price will just collapse for you? No. Right? So when the market is very, very bullish, overly bullish, we will see actually, let's go back here for SoFi. Let me show you one more thing to look at rather than just looking at VIX. We can also look at individual stocks. Where is the chart? Right here. See, this is the chart, and then we can actually add indicators. RSI is the one that I rely on the most out of all the other indicators. Why? When we look at the RSI, right, last week here, when SoFi was 15-ish, when I bought a lot of shares, 1,800 shares, close to 15, and I will show you, by the way. And then it was just 20 or 24, something like that. I remember looking one day, it was 24 RSI. When RSI is under 30, it's always time to buy, because RSI under 30 shows a stock is temporarily underheld or temporarily oversold. Yeah. And then when it was last year, right, when it was so high up, you look at the RSI is 66, 60, over here is 70, and at one point it was 85, 83, 85, and man, now the first time RSI go over overbought situation, it doesn't necessarily means the stock is already over value, okay? And actually, SoFi at that time wasn't even overvalued. Actually, even at $32 per share, SoFi was not overvalued. That's why I did not sell a single share. Compared to AppLovin, it was way overvalued at $603, so I sold everything, and it actually shot up to 700 plus before it crashed down to 360. So for SoFi, it has to be, for me, over $40 at that time in order for me to trigger to sell some of my SoFi shares. Because at $32 per share, it was only at the higher end of the valuation. It's not actually overvalued. No, it has to be 40. But now, with my expectation for the end of this year, base case $35 per share, bullish case $45 per share, and then if there will be inclusion into S&P 500, SoFi should be between $50 and $60 per share. So in that sense, SoFi has to be at least $10 more than the highest expectation that I have, meaning $70 per share, in order for me to trigger selling some of my holdings for SoFi Technologies. That is how I calculate it. And when I sold Palantir at 136, 140-ish per share, no, actually that was Robinhood. I took it back. Robinhood was only worth $70 to $75 per share, but then it was $150 per share. So by the time it triggered a sell signal, it was already 136, and I start to sell, and I sold it off, and now it's what? Robinhood is only 70 plus and minus, and it was actually 66 last week. Now I'm buying it back, right? So only if SoFi will be $70 or higher per share, unless that condition is met, I would not sell a single share of SoFi for the rest of this year. And as a matter of fact, SoFi should be worth between $25 and $30 per share right now, even if the growth will be only 30% for revenue growth for this year and next year. That's my calculation. But if we will continue to see 35% to 38% year-over-year revenue growth, that is higher than the 30% year-over-year revenue growth base case, then SoFi should be $40 per share plus quite soon. But nothing that I'm saying is financial advice. I really encourage everybody to do your own due diligence. Once again, this is Neil. Thank you for stopping by. This is crazy. Buy low, sell high. Selling high is whenever you see fit, whenever you need the money, whenever you have another better opportunities, another growth stock that can grow faster with higher profitability, whenever you see that either the stock that you're holding is already way overvalued, such as the case of AppLovin and Robinhood that I just discussed, and whenever VIX is too low, then you probably can sell some shares, because whenever VIX is low, such as the end of last year, under 15, guess what? Something bad will start to happen. It's always like that. It's always a cycle. Whenever something is kind of too quiet, too good to be true moment, you want to sell some, right? Or your stocks are overvalued, or you need the money, or you find another better stock with better growth prospect, with better profitability, with better net profit margins. Then of course you sell some of your current existing holdings and buy some of the better ones, right? So that depends on you. But how to buy low is whenever the market is not fearful, you have zero chance of buying low. Whenever there is fear in the market, you have a lot more opportunities to buy low. Why? Let's take a look. Before I go, let's take a look at Nasdaq again, right? When we look at Nasdaq over the last 25 years, remember every time when there is a fearful market condition, right? Year 2000, we have dot-com bubble. Year 2020, year 2001, and 2002, we have 9/11 attack. The tallest building in America collapsed after the airplane struck it. And then year 2008, we have the too big to fail banking industry and Lehman Brothers problem, right? And then in 2018 or 2016, we have SARS or some other pandemic kind of problem. And then 2019, we really have the pandemic problem, COVID-19. And then 2022, we had the commercial banking industry collapse problem. And now 2025, we had that Liberation Day. 2026, we have the current Middle East conflict. Okay, so each time you look at that, right? We just went through that. Each time when the market dip, it's dipping for different reasons. But do you have to care about the reasons? No, you are a long-term investor. You buy whatever is undervalued. Buy low. What does it mean by buying low? Buying low means regardless of what triggers the markets to come down, regardless why every stock you look around is dipping crazily as if there is no tomorrow. And you see that their growth is amazing. You see that they have been doing wonderful, constantly growing businesses, but all of a sudden they all come crumbling down as far as the share prices go. And you see that, does it make sense? Will it last forever? Will the same condition last forever? You have to keep your mind kind of clear and away from the rest of the herb, away from the rest of the people, if you will, and keep yourself a clear mind and look through the same situation from different angles. Don't just take a look at one single angle. Oh, the market is doomed. The headlines say the market is doomed. Oh, oil price will be 160 per barrel next month. Oh, will be 250 by next by Q3. No, you have to be very clear in your head. Will this really go on forever? What is the worst case scenario? What if the worst case scenario will not happen at all? What is likely to happen to the stock market? What is likely to do to the sentiments of investors? You and I have many times has witnessed that the sentiments of the market can change on a dime. Last week was like crazily down. This week can be crazily up, right? So regardless what triggers the market to come crazily down, your job and my job as long-term investor is to find undervalued companies so that when we buy it now, we can have expected higher returns because of their lowered share prices, temporary lower share prices. If there's no fear, how can you and I find discounts on the market, right? Okay, this is Buy Low, and next time when it is about time to sell, I will let you know how to sell high. Thank you for watching, everybody. Love, and let's enjoy a cup of coffee together. Beautiful coconut flavor, beautiful, lovely. Oh, with some hint of honey. It's wonderful stuff. Thank you for watching.